Ladies and gentlemen, what's going on in this marketplace? If everyone's buying Bitcoin, then why isn't it going up? Because they're buying it at discount, ladies and gentlemen. And they will continue to buy it at discount until they are satisfied that it's time to start selling it. Those of you that are focusing on people selling when Bitcoin is dropping, then that means you're following the wrong people. You know, when you want to be selling someone who wants to sell something of value at a lower price, that doesn't make sense. Go and tell your nan, go and tell anyone and your friend and their dog, would you buy something of value to sell it at a discount? No, you wouldn't. Tonight's quick video is going to break it all down for you and prepare you for tomorrow's Jackson Hole Symposium. Yes, ladies and gentlemen, it's a big day. And what we got to be focusing on is whether or not Powell is going to give us the flavor as to whether or not we're going to get rate cuts. Let's break it all down. So what's caused the sell-off today? It's not no whales. It's not people maneuvering. I mean, look, Bitcoin is being purchased as we speak. And we know that just from this chart, which I'll be breaking down very shortly. But today, the manufacturing sector had seen its best growth since 2022. Look at the data. Came in at 55.4, higher than what they expected, only marginally lower than what it previously was. It shows you a sustaining economy. The flash manufacturing came in at 53.3, higher than what it was before. This shows expansion. Now, the key reading was the flash services, and this shows you a survey of 400 purchasing managers which asked respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supply, deliveries, and inventories. So it looks like to these guys, everything is doing great. Going into Bloomberg, you can see here that the treasuries shot up. Well, the yields shot up. Why did the yields go up? You need to understand this. When the yields go up, ladies and gentlemen, this is a problem for the stock market. Why? Because the tech market is heavily invested in debt. They borrow money. And the 2-year yield, the 10-year yield, these are all going to be subject and tied to the NASDAQ. When the NASDAQ itself goes up, the yields go down, okay? But when the yields go up, the NASDAQ goes down. Now, NASDAQ really didn't drop down today, but NASDAQ is getting ready for something interesting. And there is speculation that there are dip buys coming into play, but it's being compromised with this story that inflation might be a problem. Look at this. It says here that caution prevailed on Wall Street ahead of Jerome Powell's speech, with stocks falling and bond yields rising as a key factory report raised concern that inflation pressures could dim the outlook for rate cuts. If investors can see that inflation has got the possibility of going up again, then there's no chance that we're going to get these rate cuts. Now, look at the rate cuts. Let's refresh this just for a second. It started off at the end of last week at 94.4%. Now it's coming in at 73.5%. This has just dropped nearly 10% from the last reading from a couple of days ago, which was 84.8. Now it's at 73.5. Investors are starting to smell the coffee, ladies and gentlemen, and realize that maybe cutting the rates might be a little bit of a problem right now. So who's going to be right? Powell or Trump? Firstly, you need to understand what the money is doing. Euro, is it a safe haven? Well, I think Euro has been behaving very well as a safe haven, given that it's been marketed up significantly to the upside. But what you've got in front of you right here, guys, is a possibility that maybe tomorrow we're not going to hear what we want to hear when it comes to Jerome Powell, because he's been getting data that is suggesting that the US economy is doing fine. Euro usually tends to be a bit of a safe haven. When it goes down, the dollar dominance goes up, okay? And it makes up 56% of the transactions in the dollar dominance. Now, the dollar dominance is a basket of asset classes. You've got the yen, you've got the pound, you've got the Swiss franc, and the Canadian dollar. And all of those assets combined together against the US dollar give you the dollar index. Now, what you've got to be careful of is we're starting to see the dollar climbing back up. Did take a little bit of a tumbler to the downside, but it's starting to go up because investors are not only just selling stock. I mean, if we just go over and have a look at it, you can see Nvidia. It's getting ready to roll over, ladies and gentlemen. And of course, this madness right here about Beijing's move to restrict sales of Nvidia's AI chip after Lutnick's insulting remarks, what does that tell you? Well, it tells you that investors are getting insight into what the future could be like for earnings for Nvidia. But quite frankly, tech is always going to be tech, and I don't think it's going to impact it so much. But if you've got interest rates going up and the yields specifically are rising, that is going to hurt the stock market. And that is why the NASDAQ effectively pulled back today, because investors' expectations of the future when it comes to interest rates is saying that they think it's going to be higher. Look at the 10-year yield, slowly but surely moving up. Now, this is the current interest rate at 4.5%. With the yield moving up, it means that investors are anticipating that the future shows that interest rates are going to be higher for longer. And we know that because there is a number of things that are going to impact inflation going up. The flash services PMI, as I said earlier, 400 purchasing managers were asked how do they rate relative level of business, and they understand that new orders, prices, supply, deliveries, productions, inventories, when all this activity is happening, it does give us the idea that the inflation could be impacted by this, and that means it's more than likely going to go up. So we go back to the idea of the euro. The euro right now is preparing itself to start rolling over. If the euro goes down, it means the dollar goes up. What is another alternative safe haven? Gold. Well, if interest rates aren't going to get cut anytime soon, when gold goes up against the interest rates coming down, then that means investors are effectively getting themselves ready for the idea that maybe dollar is going to come back up again, because they may not even cut the interest rates. And in tomorrow's Jackson Hole Symposium, if Powell gives a hawkish sentiment, the markets are going to drop. That means investors will equally go back into the US dollar. And if they go back into the US dollar, what we really need to see them doing is going over into the bonds market. But as it stands, it doesn't look like they're going into the bonds just yet. They might just be getting involved in cash positions, which is sitting in dollars. Quickly navigating across the cryptocurrency space, we've got a lot of activity on the ETF. We've seen that the ETF has come down from a high balance of 749,900 down to 747,423. And you can see that Bitcoin today has taken a little bit of a tumble to the downside. Now, again, we managed to take advantage of this move to the downside with the Platinum members this morning. So let me just show you this. And this is the Platinum trade setups that I provide every single day for the members. And I give them my trade setups on what I'm trading. And today I was, of course, trading Bitcoin and Ethereum. And I shared my entries right here. Just gave them the idea that we were anticipating Bitcoin and Ethereum's price to come down today, because I had the expectation that prices would actually start to pull back on the Jackson Hole Symposium meeting tomorrow. But also the data itself gave everyone the idea that maybe the interest rates might not actually get cut or as much going into 2000 and towards the end of 2025. So what we were looking for today, we were looking for a movement to the downside on the euro, and we succeeded that move to the downside with price coming lower. That was happy days. Didn't quite get the drop that I wanted. I wanted to see it go down to 1.16211, and we ended up at 1.16. Oh yeah, no, we actually hit that target. Sorry. Yeah, we did go down towards that target, and we hit nearly the whole number of 1.1600. Anyways, moving on from there, wanting to see gold go down, and gold is behaving a little bit of like a pain in the ass. Why? It's not going up and it's not going down, and this just shows you proof that investors don't know where to position themselves. When gold consolidates like this, it's either going to lead to a massive breakdown or it's going to lead to a massive run-up. If they do not give us the rate cuts this year, and for some wild event that they say we're not going to cut until 2026, gold's price will actually slump and it will drop aggressively, which in my opinion is still a worthy buy. Why? Because they will cut the rates. At the time that they do, that's when we get the Fed pivot. That's when gold will then start to make a move to the upside. Now, going over into it, we ripped it apart with NASDAQ today. We wanted to see NASDAQ take a tumble to the downside. We wanted to see 23,030, which was the target that I wanted to see them take today. But what they actually did was they kept it quite choppy. It was quite a horrible session. They came down, they came up, and then they equally came all the way down towards the 23,120. We missed that actual setup target per se, but we came back into the vector candle recovery, which is usually what happens, where they hit a vector candle and they usually try to make a little bit of a reversal. But cryptocurrency today came through wonderfully. We wanted to see Bitcoin come down towards the initial target. Was the first one was 112,682, and the next one was 111,905, which is what I wanted. and we go over to Bitcoin, you can see it actually came down, not that one, but it came all the way down towards the second target, nearly hitting the second target of 111,915, but just fractionally just tapping that 111,989. But we caught the entry right there, and it was a nice little stop run. I said to the guys today, just be careful, there will be a stop run, which is what they usually do. Stop run to the upside and then bring it back down again, and we exploited that on our trade. So this is what we did. We copied the trade over to Bitcoin, okay, and we took the entry at 113,264 down to 112,334. I didn't stay for the full move down, but never mind. We cleared ourselves a nice $2,753 right there. And then, of course, we went into the same trade with Solana. I traded to Solana at 184,1139 down to 186,152. We made 3,481. And then we then took the same trade again on Ethereum from 4,265 down to 4,225, and we cleared 3,444. So just shy of nearly 10 grand today on these trades. And it worked out really well for us. It was a bit of a tough time with the move up, and then they just dropped it back down again. But given that I use a relatively decent amount of leverage, and I don't need that much of a big move to happen to realize a return, okay? And that's the thing when you use leverage, you've got to be very careful with your entries. I did see a drawdown. It was roughly around 5-6 grand drawdown, and then we managed to make the move to the downside. So that was happy days right there. Now, going into that, we saw the same thing with Ethereum there. We wanted to see 4,060 on Ethereum, and we ended up seeing, no, we didn't even see the full target. We just managed to see price go up, and then it just come back down. It was a very choppy session, guys, but that is usually what happens when you're trading or trading into a big event, which is the Jackson Hole Symposium. Now, the key thing that we've got to be paying attention to tomorrow, ladies and gentlemen, is this. Is Bitcoin getting primed for a move further to the downside? Quite frankly, guys, you've got to accept that they are buying Bitcoin. This is what's going on. They are buying it, and there is one more zone that we need to see them break into, which in my opinion will be a very good discount for Bitcoin, if I'm quite frank with you. Going into the order flow, you can see they're ready for it. Look at all this. All these guys are planting liquidity in this range, waiting for Bitcoin to go down. That's Ethereum, sorry. But look, Bitcoin, you can see the concentrations coming into play. 10 million there. And you got, well, I see about 25, 30 million coming into play earlier on, but I think they've removed that liquidity. But you can see that actually, is it down here? No, it wasn't down there. They must have removed it. But there were some big players. There you go, 62.54 million at 106,000. What you've got to appreciate, ladies and gentlemen, is this. Bitcoin, even though there's so much hype with Bitcoin, I promise you, I'm giving you a promise. Bitcoin's going to come back up to this range right here. This is the red vector candle region. And the only way that it can come back up to that point, guys, is if tomorrow Jerome Powell turns around and says, we're cutting the interest rates. That means the yield on the dollar is going to be reduced. That means investors are going to take out dollars, cancel that, go and exchange it over into assets against the US dollar because they'd be losing appreciation on yield. So that means Bitcoin will then start to climb back up again. The actual ETF, they're still buying it, guys. All right, they've taken a few sales off it, but they are still accumulating the ETF, and all the hype that's happening around cryptocurrency is massive. Speaking of which, Coinbase lists Ethereum-based stablecoin 4 months after launch. Now, let me explain something to you. We're going to go over have a look at Circle because everyone is paying attention to Circle, and you can see here, Circle is still going down, guys, but it's going down on light volume. Again, please understand, this is going down on light volume. They are accumulating. This right here, 64 funds. I said to myself that I'm only going to be buying this once we start seeing 100 funds getting involved in Circle. Once that hits to 100, I'm going to start buying Circle because I just understand that the service that they are providing, look, again, it's making news, not Circle itself, but Coinbase lists Ethereum-based stablecoin 4 months after launch. What does that tell you? Coinbase is getting concerned. It wants to get involved in the stablecoin market. Why? Because this company right here is going to challenge Coinbase. I promise you, it's a competitor. That's why they initially denied the IPO for Circle beforehand, and Coinbase was the top dog. Now look, 76.45 billion as a market cap. Its average daily shares per day that Coinbase trades is only 14 million shares per day. Now compare that over to Circle itself. You've got yourself a market cap of 30.59 billion, half of what Coinbase is, but the average daily amount of shares that are traded each day is 25 million. So it's nearly 10 million more shares per day. That is always going to grab investors and hedge fund managers' attention because of the sheer size that they are able to buy and sell stock from. Once Circle gets their price action going and investors start to offer it out, it will be all on the basis of their business And of course, anyone else that they're getting involved in, anyone they're getting into bed with, any other companies, they are going to start buying stablecoin companies. I promise you, because Circle wants to dominate the stablecoin space. And that's why Coinbase itself has come out to do this, because I believe it's actually feeling the competition. And it's the only way it's going to maintain market share, by challenging Circle itself. With that being said, ladies and gentlemen, you can see Bitcoin on the daily time frame has broken the 50 EMA, and the 5 and 13 EMA are slowly getting closer towards the 50 EMA and maybe trading lower. Just be mindful. Bitcoin has made a nice little run up. It's made 2 all-time highs this year. It's done very, very well. You can't complain. Now they need to start buying more of the Bitcoin, and we know that's going to be the case because they're picking it up all in these ranges. This is an opportunity now for you to ask yourself, do you buy the dip? Remember, if we are in a successive bull run to the upside, or Bitcoin is going to be trading higher each time it then pulls back, then you've got to say to yourself, as a dollar cost average trader, okay, that every time you see Bitcoin pull back, it's going to be getting ready to come back up again, okay? How far down will the dip go? You know, you buy the dip, but it keeps dipping. Well, ladies and gentlemen, that's the one thing that you've got to say to yourself. Can you allocate enough capital to be able to withstand that retrace? Because you've got specific ranges in Bitcoin that it could easily return to in the future. It can easily come back into that because the consolidation here is very, very small. Why? Because this was the consolidation. That was consolidation. This was the trending up here. There's barely any consolidation around this all-time high. This was consolidation. This was the result of it. Now, this is consolidation. This was the result of it. This was consolidation. This was the result of it. So what have you got up here? Very small consolidation. Before your Bitcoin is going to hit 150, 200,000, 300,000, they're going to need to buy as much of it as possible, ladies and gentlemen. Okay? With that being said, going into tomorrow and the Jackson Hole Symposium, Powell is going to be speaking from around 3 p.m. UK time, which is 10 a.m. Eastern Standard. It's going to be a very interesting day tomorrow. So just please be very cautious with your trading. We're looking for him to say, yes, we're going to get Fed cut bets. And if we do get those bets coming into play, then that means that these guys here will be expecting the interest rates to get cut. Gold's price should be going up. Bitcoin's price should be going up. And then when we get the Fed meeting itself on the 17th of September, the market gets its rate cuts. And then that's when it pivots. And that's when the market decides to drop. And then we'll be going into a corrective phase. And that's when we start buying stocks at discount. With that being said, ladies and gentlemen, mad love and respect. And I will be tuning into you all tomorrow. Peace.